We're joined today by Gary Shields, Chairman and Managing Partner at Nassau Street Partners, who's going to share his outlook for the M&A market in 2026. Gary, there's been a lot of ups and downs in the last 3 to 4 years. Where do you see things shaping up here coming into 2026, 2027, and beyond?
The past 3 or 4 years have actually been defined by sort of hesitation in the market. We've seen increased interest rates, a widening bid-ask spread, and pricing of valuations in the marketplace. 2025, companies and buyers began to see as a stabilization. So the M&A market started to return. 2025 transaction volume was up about 15 or 20% over the prior year. But 2025 was somewhat defined by the mega transactions, the big over 100 million and the billion plus transactions. As we come into 2026, we actually have seen that trickle down into the medium size or middle market companies and smaller markets. And we're seeing that even though interest rates remain high, we've seen some acceptance that at least the outlook is relatively positive going forward. So we're seeing private companies really drive that. And what we see is the moderation in the environment. We also see an increased number of buyers that had hesitated over the past few years coming to market. We see pressure on the private equity groups who have a lot of pent-up capital, and they have a lot of aging portfolios and limited partners who are looking for some cash return. And that has led to an increased market in the number of transactions in M&A. As we go into and continue into 2026, I think it's a bright outlook. We talk with a lot to our fellow investment bankers in the industry, and everybody's seen an uptick in M&A activity. We've seen that as well. That has really led to an opportunity to excel in positioning and in execution. And at Nassau Street Partners, that's what we really focus on. We do deep research with regard to our clients. We determine how they differentiate themselves, what qualities they have, what the growth rates are, what are the special elements that can help drive the best terms and conditions for those clients. We also focus on the execution of the transaction. And in that, we look at finding the right buyers, targeting the right buyers, not just going out to a cast of thousands, but identifying, vetting the right buyers, and making sure that we can get through to them. Third, it's management of the process itself, keeping that tension going among the buyers. So it's a matter of increasing the tension and reducing the timing when we do a transaction. I would be remiss if I didn't mention the expertise and experience that our team has. The partners alone in our team have a cumulative more than 100 years of experience. We've all worked in various verticals, at various stages of companies, and we understand the markets. We execute quite well. So Nassau Street Partners is poised, I think, to continue that evolution. We are somewhat young in our M&A activity and experience, but we encourage any prospect to have a serious conversation with us.
Great. There's a lot of groups actively seeking to deploy capital into businesses and acquire them. Strategics, family offices, private equity funds. Which groups are you seeing that are active in deal making this year?
Well, it's interesting because the family offices really are sort of, you have to determine which ones actually can or will want to acquire companies. So we don't focus as much on the family offices as acquirers, although some are interested in acquiring. The PE groups are really being pushed by the fact that they had these aging portfolios of companies that are maybe 4 or 5 years old, and their limited partners are looking for returns for them. At the same time, we have $2 or $3 trillion of PE money out there that's looking to be deployed. And the PE firms, I think, are very active. They're also very fast in making offers. The strategics, on the other hand, have the strongest balance sheets that they've had in many, many years. So they had the ability to focus on very high quality companies, companies that are differentiated, companies that will help drive their earnings and help the stock prices, that type of thing.
If you're speaking to a CEO or board member or management team, like you do every day, that wants to position themselves for an exit, what's the best way for them to go about that in this current climate in 2026?
Well, I guess, you know what, I would start by saying, getting started as early as possible and researching through hire somebody who knows what they're doing, like Nassau Street Partners. I mean, we've gone through this so many times among the partners and myself that a CEO really needs to be able to run his company. And he can't really be diverted by trying to figure out what to do or how to go through the process. So contact somebody like me or one of my partners to talk about what they're doing, what they're thinking about. Allow those firms or allow a team like ours to research the industry, look at valuations. We typically don't go out with an asking price. We let the market define that, but we can give our clients a good idea of what to expect. So that's what I would tell them is start early, find somebody who really knows what they're doing, and let them do what they do best.
Gary, thank you. Very insightful.
Thank you.